Welcome. I'm thrilled to present to you the Villa Outlet story, because that's how it is, really. It's a remarkable story about acquisitions of 11 centers in the last few years, and a really growth story as well. Let me see if this works. So I'm going to present to you an overview of our portfolio. Then a little bit about sort of the financials and the trading performance, full year 2018 and year to date April. Then a little bit about the vision and our strategy and how we think we can be different than to many other outlet center operators and landlords. And of course, there's room for Q&A as well. Well, we like to see ourselves as the new kid on the block. We are the newest and fastest growing owner-operator of outlet centers in Europe. We were founded in 2014. We acquired 11 outlet centers in the last few years. And our strategy is to transform the outlet centers that we acquired into premium fashion outlets. Our vision is that it's much more than just discount shopping. If it was just discount shopping, we would have a very difficult battle with our online competitors. Discount shopping is very much part of the experience, but it's much more than just discount shopping. It's a day out, and what we're trying to do is create a very pleasant overall experience that's worthwhile traveling to, and a day out for family and friends. We see ourselves as retail experts. Maybe at the end of the day, we are a real estate company, but we manage our business as a retail company. Our most important KPIs, operational KPIs, are all retail KPIs. It's spend per visitor, it's yield, it's sales, it's conversion rate. Again, we see ourselves as more as retail experts than maybe as real estate experts. One of the unique selling points of Villa is our strong brand relationship and brand partnerships. The data we share with our brands, the day-to-day sales numbers that we see from our brands, and the way we cooperate, the partnership, a very strong relationship, is very much part of a successful business model. Again, Villa was founded in 2014. By its principal investors, APG and Hammerson. And the business was started with two initial operating partners, being Value Retail and Meyer Bergman. So here you see an overview of the 11 centers that we acquired. It all started in 2014 with Bataviastad. And over the years, we acquired 11 centers. The last acquisition was Oslo Fashion Outlet in Vesby, close to Oslo. So we acquired 11 centers in 9 countries, all the way from Oslo to Seville. The total GLA is almost 260,000 square meters, which makes us the 3rd largest outlet center in Europe. We have more than 1,100 stores. We have more than 850 brands, and the spot occupancy at the moment is 92%. So obviously the occupancy is a very important operational KPI for Villa. We have a leasing team dedicated to doing deals with the brands, but it's not only about improving the spot occupancy, but it's also to get the right brand mix and the right brand offer in place. Then some financial and trading performance. Again, these are full year numbers for 2018. And these are very much the real estate KPIs. The gross asset value was 1.6 billion. These numbers are all in euros. The net asset value was 775 million euro, and the net rental income was 78 million for 2018. Then more the operational KPIs. And these KPIs are more retail KPIs, I would say it. Well, from a brand sales, the brand sales in 2018 was more than 1 billion, which was up 9%. And also from a sales point of view, we're the third largest outlet center operator in Europe, if you look at the performance in 2018. So not only GLA, but also brand sales. The footfall was a bit more than 30 million across the 11 centers, which was up 3%. And the spend per visitor was €35, which was up 6%. So driving footfall and driving the spend per visitor is very much part of our business model and our day-to-day operations. Then the year-to-date numbers. We had a pretty strong year pretty strong start of the year with the brand sales compared to last year. So last year we had 9% growth in sales, and the first few months, so year-to-date April, we had another 8% growth compared to last year. If you look at the brand sales, footfall was up 7%, up to 9 million, and the spend per visitor was €34, which was up 1%. So quite pleased with a strong start of the year. And because in many parts of Europe, summer started last year in May and ended in October. So we think if we get more normal weather pattern, then we'll have a very strong second and third quarter as well. Our vision is we want to welcome our guests to experience best-in-class, beautiful local, premium shopping destinations across Europe. And I want to highlight 3 parts of this vision. Experience. So as I said before, we want to create a unique and compelling experience for our guests. It's much more than just discount shopping. Again, if we would be only focusing on discount shopping, we probably will lose from the online retail channel. If you look at the overall retail sales numbers, then the outlet center channel is the second largest retail channel at the moment, if you look growth-wise, after online. But we are very much in the business of transforming our centers into premium fashion outlets and creating an overall experience for our guests. Then beautiful local. I think that's a part of our strategy that makes us unique and differentiates us from other outlet center operators. We acquired 11 centers. They're all very different, and we want something beautiful local in every center. It can be a brand or a food and beverage operator. It can be art, like we have here in Freeport as well. So we are challenging the teams to make sure we have a beautiful local experience as well. Otherwise, it can be very much the same as in any other outlet center in Europe. And last but not least, destinations. We really want to create destinations. Many of our outlet centers are a little bit further away from the city center. So we want to give people a reason to travel. It has to be worthwhile traveling to one of our outlet centers and to have a pleasant overall experience after our visits. Our strategy is very much about brand and guest engagement. So if you look at the guest engagement part, it is all about guest and centricity. We would like to provide great services across the customer journey. So it starts at home, online, and then transitioning to our centers and even continuing after each guest visits. So guest centricity, it's very much part of our DNA. Then the brand engagement, as I explained to you before, we have a very close brand partnership and brand relationship with our brands. And the way we cooperate with the brands is really a win-win business model. We share a lot of data. We receive sales numbers from our brands every day, and we share a lot of data about the performance of the brand in our centers as well. When you look at our organization, we have a decentralized matrix organization, as we like to call it. We would like to emphasize on the centers and the teams. At the end of the day, the value creation is happening at the centers. So we don't want to create some sort of a head office culture, but really empowering the teams and make sure that we, as a group, support the teams in the centers. So when you look at our teams, it's a quite unique mix of people that came from value retail, people that have a background at Nijnver because they joined via as part of the acquisitions, We have people like me that came from Unibail-Rodamco Westfield. We have a lot of people with a retail background that come from luxury brands and other retail brands. So it is a mix of people, different background, but very committed to the growth of VIA. So again, our strategy is all about guest and brand engagement. And we have acquired 11 centers, but they are very different. It's very difficult to compare them with each other because they're different from size, positioning, challenges, but most of all 11 centers have growth potential. There's no one-size-fits-all strategy for these 11 centers. Of course, it's about brand and guest engagement, and we would like to transform these centers into premium outlets, fashion outlets. But every center needs a tailor-made approach. A tailor-made approach because the challenges, the opportunities are different in every center. What we know is that the consumer wants a unique and compelling experience. And there's 5 elements that we are focusing on to make sure we are redefining the outlet center business model. First is the brand offer and mix. Remerchandising. We are very much focusing on premium brands, but we also want the beautiful local brands. So we want to have a great mix and a balance between strong international brands, premium brands, and beautiful local brands. It's all about the mix, the category mix, and the overall offer. Then digital engagement. In my view, if you're in the consumer business, you don't have a choice. The digital transformation is part of our business, and we are very keen to invest in a digital transformation, online, social media, and get data from our digital strategy. Food and beverage is key in my opinion. Food and beverage is part of the overall experience that we offer our guests. It has a very positive impact on the overall dwell time. If you have a good food and beverage offer, people tend to spend longer and spend more money in our centers. And at the moment, we have food and beverage opportunities in every center. It's either a lack of, or the quality is just not good enough. Overall, in VIA, we have about 5% of our GLA committed to food and beverage, and our ambition is to grow that to 10%, so double the F&B offer. During the tour, you will see that the local team has done a really good job here on the food and beverage. And they created a special area with a lot of beautiful local concepts and brands as well. So Freeport is probably one of the centers that is an example for many other centers, if you look at the food and beverage offer. Then tourism connections. There is a tourism opportunity in all 11 centers that we have and that we are managing. In some, it's much bigger. For example, here in Freeport, in Prague, Mallorca, obviously, Bataviastad. But tourism is very much key and part of our business. And we see growth opportunities by creating dedicated tourism teams in our centers. And part of our guest centricity is a focus on customer services and hospitality. We're looking at extensions. We're doing an extension at the moment in Hedde, near Göteborg. But we are looking at some feasibilities for more extensions at some of our centers across the portfolio. And hopefully we are able to do more acquisitions in the future when they are appropriate. So our strategy is about guest and brand engagement and transforming our outlet centers into premium fashion outlets. And our execution of the strategy is through the 3 R's, as we call it: remodeling, remerchandising, and remarketing. So remodeling is about elevating our centers. It's about redesigning. It's about creating a better look and feel and a more attractive experience for our guests. Part of it is reconfigurations and extensions, and part of it is focus on the retail development. So it can be the facade or the fit out of a store, which is very much part of the remodeling project at VIA. Remerchandising is about creating the right brand offer and brand mix, including food and beverage. And remarketing is all tools of marketing, digital, tourism, to grow footfall, and not only footfall, but to grow quality footfall. So when you look at the 3 R's, remodeling is a key part of our execution. It's about elevating the look and feel of the centers, and it's to create a pleasant experience by redesigning and upgrading the overall in-center experience. Again, I said it before, we want to create a destination worthwhile traveling to. So creating a pleasant environment by remodeling is very, very much part of that. Then retail development. In all our centers, we have retail development teams in place. We are working with the brands to make sure the fit out of the store is of a good quality and attractive to our guests. So we not only look at the shop fits, but also at the facades. We have a very impressive track record with the remodeling works. In the last few years, Bataviastad, Freeport, Landquart, near Zurich and Mallorca have all been remodeled. And in all centers, we've seen double-digit growth brand sales. At the moment, we're doing 4 remodeling projects. We do it in Wrocław in Poland, in Villa-Boas here in Portugal, in Zweibrücken in Germany, and in Seville in Spain. So obviously we hope to see double-digit brand sales there as well. It's not a remodeling, and it's an extension, but part of the 50 million is an extension in Hedde, near Göteborg. Then remerchandising. Remerchandising is all about leasing. As you can see, we executed 305 deals in 2018, and we are even more ambitious for 2019, because in total 309 deals were planned. The good news is that our aim is to get more new brands from 96 executed in 2018, and the goal for 2019 is 124. And this is all about sales per square meter, yielding. So if a brand is not performing, we either downsize them, so we give them a smaller space, or if we can, we exit the brand. And then we get in new brands, or we're upsizing those brands whose yields are very strong, and we see more opportunities to grow. So this is a part of our business, day-to-day operations, looking at the performance of the brands, make a decision about upsizing, downsizing, exiting, and of course getting new brands in that also very much part of the proposition of the center and the positioning into premium fashion outlets. Then marketing. Timon said it in his presentation as well. Marketing is very important in the outlet center business. It is a 360 degrees marketing approach from maybe more traditional marketing tools like advertising and PR. But we are spending more and more on digital marketing as well, whether it be online, social media, or that sort of channels. And then tourism. There's about 5 centers that tourism is a very important part of the business already, but we see opportunities in the other 6 centers as well. On the right, you see actually some images from a marketing campaign that we've done in the last few months. It was a sport campaign. We're about to start a summer or holiday, ready for holiday campaign as well. So some of the marketing campaigns are created on group level and then executed in the centers, but most part of the marketing is executed and initiated by the centers and the marketing team in the centers. Then last but not least is part of our remarketing, but actually also part of our digital strategy is the Fashion Club. The Fashion Club is a loyalty program that is rolled out in all 11 centers. It's a earn and burn loyalty program, and of course is designed to attract and reward our local guests and delivering loyalty to our brands and repeat visits to the centers. What we see, it's an earn and burn program. Fashion Club members earn 5% in credit from their transactions, and they get a discount back if they have earned so many credits. It's creating loyalty, but we get a lot of data out of the Fashion Club as well. So we are able to present very interesting data to our brands, and it gives us much more knowledge about the guests that we visit. So from those 30 million guests, we want to know them. We want to talk to them. We want to connect to them, and most of all, we want them to come back to our centers. The other thing is, of the Fashion Club members, on average, spend 30% more. So spend per visitor is 30% higher than non-Fashion Club members, which is a substantial number. So at the moment, we have 614,000 guest profiles, and the teams are working hard to increase these numbers, and we have about over 500 participating stores. So the Fashion Club is, yes, it's part of our marketing mix, but for me, it's very much part of our digital strategy as well, and to be able to get more data and connect with our guests better and better. Thank you very much.
I joined Via 4 years ago, and I used to work in the fashion business for more than 15 years. I used to work for Diesel, Dolce & Gabbana, Lugio, Trussardi, Max Mara, and over all the brands that mostly part of them were Italian. Italian brands are very passionate, and they're also very dramatic. So they're like prima donnas. So they normally think they run the world. And they visit shopping centers and like a blasé thing. Okay, yeah. So nothing showing any kind of need. So when I was in the other side of the table, I remember to have several meetings with shopping centers. And in those meetings, we were always talking about different things. There was not a common language. So my main goals were always, we want to achieve better conditions in terms of rent, according with my profit and loss, or a better location. Also because when I was in the other side of the table and I was a very posh brand, I look to that location, and I wanted that specific location, even if it's there already Burberry. I don't care. I want that. I want that location. Oh, listen, but there's another one here. No, I'm sorry. I want this one. But why? They never ask us why. They never try to understand why I wanted this specific location. So there is a gap between retail and shopping management. And that's the major difference at Via. So we are real estate, of course, but we also are retailers. Retailers providing retailer services to the brands. So our communication, it's closing the gap. So we close this gap of communication with the brands. And what we do is very simple, very basic. We just listen. We just stay with them and listen. Listen very carefully, because you might think that the brands are very structured, but like I said, they are dramatic. They live in Wonderland. They are not very structured. They are not real business people running the brands. They are creative. And sometimes brands are here, sometimes brands are down. And it's the life cycle of a brand is very volatile. it's very, again, emotional. So sometimes there are revival, like Levi's. Sometimes they're hot, sometimes they're not. So this all inconsistency of the brands makes that not ever the business is being well perceived by the others that are more financial, analytical. So we retail, our goal is to fulfill this loophole. Our business model is building asset value. So in all business areas we have a local management. Of course, we have leasing to do the commercialization of the units. We also have marketing that drives footfall to our centers. We also have tours inside house with expertise people that will sell our shopping centers as a shopping destinations among fairs, with tours operators and other MICE groups, etc. We also have a very strong and important role in our community. If you think so, we employ 1,000 people in this center. 1,000 people that works here every day. So we have an important role also in the community. How we participate in the activity of the community. So we normally have some partnerships with the city mayor hall of the area. We also give some lectures about what we are doing, what we are representing here, and also give the opportunity to explain what we are doing in order to engage also the community to work here. Sorry. So how we are structured. So each center have a retail team. Each retail team have 35 to 40 brands to follow up. So there are the accounts for 35 to 40 brands. They have to follow all the business around all year, providing, again, services. Which kind of services we can provide? So imagine that you are a brand. You will register sales every day, and we also will provide information about transactions and units. With that, I will know exactly your average ticket, your units per transactions, and also we provide footfall counters in each store that will allow us to immediately know the capture rate and the conversion rate in order to evaluate your conversion, your customer service. With that data, we immediately have the total picture of the performance of that brand. We also have the total center performance, and we also have the segment performance. So we are able to do a customized report only for you, that you are a brand, comparing data, comparing with the center, with the segment, with your direct peers, but always being very transparent, but protecting the brand. So we never share, in any case, any kind of brand name or total amount. We protect always the brand. So we only give the percentage, and we guide the brand in order to have a maximized performance on their year basis. We also have some store audits. So the store audits, we do it with a partner, and we just evaluate the procedures of the stores in terms of cash desk, if they are complying with the guidelines, the law guidelines. But when we receive the results, we don't say, hey, you did it wrong, or you are not complying. No, we just give them the best practice that they can follow and to improve. So again, the relationship it's always, always focused on the brand engagement. So brand engagement is done with a key person in a basic level, store managers. Our store managers are our ambassadors. Why we call it ambassadors? Because they are the first ones that they committed with us. So normally, our first contact is the store manager. Then, in a monthly basis, he will be the messenger to the brand, and after to the country manager, and after to a headquarters level. And in parallel, head of retail, it's also having conversations with the brand in a headquarter level. So at the end, the brand is our best friend. And our best friend that will allow us to share with them some information that they always can improve their performance. They also share with us the budget, and we align the budget with them. In order to, sometimes I remember that I have a turnover sales estimation, and at the end, the brand have another one. And not the brand, the shopping center. So sometimes this gap that was fulfilled, it was not correct, it was not aligned. So in that case, we prepare a forecast sales that allow to the brand that we can have the same number. And when this is not going well, what happened? Sometimes KPIs are not correct. Sometimes we're not achieving the average of conversion rate that we want, or the captive rate is not the one we were expecting. We do a RAP. A RAP is a retail action plan. So we prepare with the brand, we sit with the brand, and we align a retail action plan with several deadlines, and we follow them according with the brand's needs. So again, we listen to the brand, and we propose solutions to improve their performance. Most of the brands doesn't look very much for the outlet business because they are focused on the full price. And the outlets is the one that sells volume. And at the end, they are just paying the full price business and the development. So the staff is not always well perceived or well trained, or they are in the bottom line of their priorities. For that, we created training, a retail program. It's an academy that have a program full year for store managers, leadership, time management models, and also we have for staff members also a specific customer service training that will allow them to give a better customer service to all our guests. We also have Voice of the Guest and Meet and Greet reports. Voice of the Guest is just a mystery shopping where we provide to all the brands evaluation of how it's going, their customer service and how they can improve. And we cross the results with the training. So we are able to customize the training for each brand according with the needs that they have and they're not doing well. And what else we need in all the cycle of a store? So we were ambitious, and we think that sometimes not the staff rotation is very high, and the brands doesn't have the right profiles to serve our guests. So we immediately develop an app, so-called Via Jobs. It's a recruitment app that is, right now it's not launched yet. It will take 2 months more or less to launch it. And this app will provide the brands a service of recruitment. So the brands will apply with their job offers according with a profile, and the candidates will also apply in the app, and it will be a match system. So more or less, the 75% of match will be fulfilled for each brand. So it's a service that its cost is zero, and they will be able to recruit staff in a daily basis, not waiting for some job offers or have to spend more money in recruitment. So we are going to provide them this kind of recruitment service. Also, our focus is remerchandising, and one of our goals is to elevate our customer experience and the guest journey. So as Otto mentioned, we also push the brands to elevate their layout and to update their layout according with what is happening in the full price. So full price also have some experience inside the stores, like they can serve you water when you're entering the store. They can serve you some sewing services. So we push the brands in order to have the same experience at the full price in the outlet channel. In order to have any kind of difference, only the question of pricing. We also are always looking for new opportunities. So sometimes we see some brands that have new collections, new lines, and they want to test it in the market. So we propose pop-up stores that it's a temporary store where the layout and the look and feel will be similar to the brand. However, they can test the brand and they can increase also sales and push for a new refreshment in the market. We also provide the trends, what is going on the market, which are the new hot brands, which are the wish lists of the brands. We also propose those brands to leasing in order to have them in our centers. Sometimes new brands are coming and they just don't know the market at all. And we propose as well, we give them benchmarks, we give them results of other competitors that they can guide and forecast new sales. We also promote events inside the stores to give more proactivity to our guests when they are already inside the center. And we also promote all kind of sales tools that we have. That is Fashion Club, like Otto mentioned, is our loyalty program. With the Fashion Club, we also track 100% of the transactions. So what does it mean? What does it mean is that local customers are loyal to the Fashion Club. Also, we can track VIP Day Pass, that is the card that gives 10% to tourists. And we also have anonymous transactions. So anonymous transactions are tracking all the guests that come here and that doesn't have or VIP Day Pass or Fashion Club. So in that case, we just ask the code, postal code, and we are receiving data that will allow us to know exactly which is our guest. We also have Mastercard. It's a credit card, exclusive credit card that only works in Portugal right now. It's with a partner, One, that's a bank entity, and we provide the possibility to our guests to pay in several times without no kind of interest, and of course increase our average spending. We also have a partnership with TAP Miles, where every transactions will be can be replaced by miles, and we also share with the brands a retail and marketing calendar that is planned and according with the campaign that is split it into spring, summer, and fall, winter. Have a mood and a concept, and with that concept, we develop all year tactical, institutional, and promotional campaigns that normally we push the brands to participate. But we don't want that the brands participate in all the campaigns, because sometimes they are very concerned about margins. And we are also concerned about their margins, because if they lose money, I lose money. So at the end, we have like a commitment, and sometimes the premium brands only works for specific campaigns. Mass market brands works for other campaigns. So we target the campaigns according with the brands, and we work on that in order to have the brands happy during all the year. And to wrap up all this, we have visual merchandising. Visual merchandising is something that the brands used to have 10 years ago, and after the crisis, they just starting to cut in their structure the visual merchandising area. Visual merchandising is telling the story. So all of this tells the story. When you enter the center, you will see the art installation that is not part of visual merchandising, but at the end, it is. Landscaping, it's also visual merchandising. Windows, art windows. So everything we build to tell the story of the mood of the campaign, of what we want to say, what we want to communicate, we want to play around with the five senses of the guests. We want to create the story and give you the idea that you enter immediately in the center, the art installation, you feel relaxed, then you have the possibility to see, close your eyes, hear the sound of what is the wind on the art installation, the flowers, the birds, the smell of the stores. And this is much more when you receive people at your home, when you receive people inside your house. So we want to welcome all the guests well. So it's all about elevating everything we do, elevating the customer experience, the guest journey. So when you travel around the center, you will hear the marketing campaign, you will see the outdoor, that is aligned with the window, that at the end it will be aligned with the art installation, that will be aligned with the art window as well. And we put all our effort in creating some good experience for the guests, because we are also guest-centric, very guest-centric, and it's our main goal. And at the end, we just make the difference, and I think we just made the difference very well, because when we will walk around, I will be very proud to show you how all this works. So thank you very much.
I have to say that I'm not sure to what extent you are aware of what is retail management. So I'm not sure if we went a little bit too deep or not on this, but I have to say that I started my professional career several years ago. I'm not going to say my age because it's not that nice to say it. But I started in the biggest shopping mall company in Portugal, one of the top developers called Sierra. And at the time, we did a very good job developing really good, nice schemes with a very good location. And what we wanted was to have as many units as possible with the highest rent, and that was it. Our relationship ended there. So we added fully occupied shopping centers, but we had no clue whatsoever of what was going on with the stores. By the way, we were getting really high fixed rents, but the variable rent was as of 5%, 6%. So in fact, we didn't care that much of what was the performance of the store, because we were getting already what we thought at the time was a really high fixed rent. Our business here, as Simon mentioned a while ago, it's not about that. The way we see our business improving in terms of sales and therefore in terms of rent is by getting really high variable rent. How do we do it? First one is moving from the old standards before the acquisition of 5, 6, 7% to what we have these days, 10, 11, and 12%. I'm going to say it again. Today, when a new brand wants to start working with us, we charge the brand 10%, 11%, and 12%, usually based on thresholds or according to the years of the lease. So already there is a positive impact because we moved from 5% or 6% to this new level. But in addition to that, we moved, and this is a story that I'm going to tell you about Freeport, we moved from a really low yield-based operation to something that has moved, well, I'm going to say it's close to double of what we had. So right now we have a win-win situation because we're charging more from the tenant side and we are driving higher yields. And how do we drive higher yields? Mainly because of the work that the retail team does. Because they are the number one responsible to make sure that each store, each brand is going to deliver more and more than what was initially expected. Today I'm going to tell you a story of it's a successful story. It's about Freeport, and this story starts back in 2004. And actually, just to give you a little context, Portugal is a very small country. We have 10 million inhabitants. If you think about Portugal, and then you look to the greater area of Lisbon, we're talking about 3.5 million inhabitants, which is roughly our catchment area. The good thing is, not just the total number of inhabitants is good, but when you think about the household income, this area, the index is 120 versus the average of 100 in Portugal. So, from the domestic point of view, we are in the richest area of the country. But when you look to the successful stories around outlet schemes around Europe, you're going to see that they do not live only from the domestic markets. They are able to add to their sales performance something that is so very important, tourism. And for us, Lisbon is our major anchor. And we say this often because Lisbon is able to drive so many tourists and more every year that we, Freeport, are able also to get more and more of those. But to do so, we needed to tell a new story around Freeport, and that new story started in 2004. I want you to bear in mind three things. First one, 2004, opening date. Back then, we've opened the biggest outlet scheme in Europe with 74,000 square meters. 74,000 square meters. We had 2 floors, ground floor with 50,000 and the first floor with 24,000 square meters. The first floor was just for leisure and F&B, and we had a capacity to take around 35 to 40 restaurants. Dwell time, 90 minutes. This was the story that we have found in the end of 2014. And by then, we came up with a plan. And the plan was, what can we do? And the issue, or I will say, the strategy was all based in the answer to this question. How can we improve? How can we increase dwell time? And the answers, bear in mind, 90 minutes. Just to give you a benchmark, when you think about the good outlet schemes in Europe, we're talking about no less than 3 hours in terms of dwell time. So a lot to improve. How did we answer to this? Well, the first one was we wanted, from the architectural point of view, from the design point of view, make the center more elegant. But more important was we wanted to bring a little bit of the Lisbon flavor to the center. Actually, if you had the chance to visit the center before 2014, you will see that there was nothing that you will see in the decoration of the place that gave you any idea, any link whatsoever to the city of Lisbon. And that was a major failure that we did at the time. So one of the things was we want to get Lisbon flavor to the center. Second one was F&B. F&B was our major weakness in the past. And it's not just because it's a trend these days, but the truth is, if we have a proper F&B, as Otto mentioned, we'll make sure we'll be giving a chance for people to stay longer in our center. What does that mean? F&B, for us, meant a totally different experience from what people have in the shopping centers. Portugal has already a lot of shopping centers. Actually, when you compare the GLA per inhabitant versus the Europe, we are slightly above that. So we wanted to get away as much as possible from the food court experience. That was not what we wanted, because in our minds, we have this inspiration that comes from tourism, and we have this key word that we have every single day, that is experience. So it's about having the tourism experience and what we can wrap up in our center. And finally, because there is no successful outlet without the most important content, which is brands. And brands, what we wanted was, on one hand, the beautiful local. Yes, because indeed everybody is looking for the international premium brands, which we also are aiming for. And fortunately for us, we are getting those on board. But it's also true and important to keep that people are looking for the beautiful local. We are driving these days, no less than 20% of our business is coming from tourism expenditure. And I say no less because we are, with the data that we're collecting from the anonymous transactions, from the tax-free companies, from credit card companies, we are trying to figure it out what is this break between 20% minimum to, let's say, 40%. Why is that? Because we have the non-European ones, Brazil and Angolans, that in Portugal they represent 50%, while in Europe they only represent for 1%. And then we have the Spanish, the French, the English, and those it's almost impossible to track. At least it was, because these days we're getting better tools how to manage that. So the answers were, we want to have, from the architectural design point of view, something that is quite elegant, charming, and bringing Lisbon to the center. We want to have F&B as an experience. And finally, we said that brands are important. And brands, the ones that will drive the high net worth customer, being it tourism, international tourists, or the high net worth customers in the local domestic market. What I'm going to do is drive you through the changes we did here. I'm not going to do it in detail, because then afterwards we're going to have the chance to walk around the center and you're going to see it alive, because it's very much sensorial rather than the pictures. But just a quick view. This was the center before the remodeling. And see this as a butterfly, the head of the butterfly, the wings of the butterfly. We have the canal street that divides the center in two equal parts, south and north. By the way, we are here. And what we did was, and this is the changes, we worked the main entrance. You're going to see the pictures. And the major change was here on the north side. If you see here, the street continued to go this way, but we mothballed all of this area and we created this passage here to create, in the most beautiful plaza we had in the center, a proper F&B concept, and along with that, beautiful facades, where today the leasing team is no longer selling to a potential brand. Well, you're going to have unit 140. No. You're going to have this beautiful building, because each one of them is different from the other. It's like selling, like if we were selling on the high street. Moving on, main entrance, we had no sense of arrival. Actually, in the past, so this is the outside car park, we had 90% of the people, because of the way the entrance was done, 90% of the people were taking the south wing, and only around 60% they will take the north one. That was because not only the center was too big at the time, but as well the tenant lineup was not that attractive on that side. Today, this is some views of what it looked like in the past, confusing, a lot of elements. I'm not going to spend this much time, but what I want to point out is that we have created this sense of arrival, and these two towers, the Disneyland towers, people, when they enter the car park, they can see it at a distance. So it's easy for people to understand where is the entrance. And once people enter, we've let them come to a central point, and no longer people are taking the left wing without thinking. Actually, people are coming and taking a decision. Should I go right, left, or straight forward? And we've created such a pleasant environment once they arrive with beautiful landscaping, with water schemes, with a coffee shop. The idea is just relax, enjoy your time, and increase the dwell time, because the more time you spend here, the more money you will spend. Then taking the lead, the right side, the north wing. So this is a picture of what the center overall in terms of design and look and feel looked like. A lot of communication, different heights, different shapes, different color codes. Actually, on the south wing, it's even more colorful. And what we did was we changed it and we turned these beautiful buildings more in an elegant way. We brought the tiles that you can see in the city of Lisbon. We built this beautiful building for Polo Ralph Lauren, and we've changed the color codes. So today it's a lot more elegant, more fluid. We've created sitting areas, but it's all about the story in terms of landscaping. It's not just about putting there some benches. There is a story in each single thing that we put here. So another view of what it looked like. It's difficult to make comparisons. That is a building that we've tailor-made for Polo Ralph Lauren. And we have now a Polo Ralph Lauren unit of 1,500 square meters. This plaza already existed, but it was completely vacant. Actually, we closed it off because we created crossroads that make it difficult for people to say, okay, should I turn left, should I turn right? People, they don't want to take decisions when they're walking in a shopping mall. This is just a picture of what it looked like in the past. So the building was there, but they were completely vacant. And the pictures I have here, they're not good enough to show you what we've made up there. So we've created this really nice concept. And you're going to take a walk around and see inside the restaurants to see how great they are. What we brought was basically restaurants that could be on the high street, and everything about the food is really experience. Is the experience in terms of decoration, layout, the service, the menu. We wanted to have, and I have to say, a wow experience with this. This is a little bit technical, so this is the path. In the past, we had here a very narrow street here. This is the view from the Central Plaza. And in order to drive people to this new area that we were building, we needed to do major works, and the major works were to demolish all of this building and to take out this slab here. And this was the result. We built this gazebo here so that, again, it's an element to drive people's attention. And this is the way to the North Mall area. We put it also, the calzada, in more areas of the center to bring a little bit of the Portuguese flavor. This is a view from inside this plaza, this street to the plaza. And there you can see already what I'm going to show you next, that is the dinosaur's rib. It's a code name. This is what it looked like, the Central Plaza in the past. Actually, we didn't call it Central Plaza, it was just a plaza. And we wanted to create this meeting point for families. So we've asked this international company to design something that was, this art piece is ours. It was designed for us. And this is each rib of the dinosaur. It has different games according to heights and ages of kids. And the idea was to have a place where dads, they can sit here when kids, they are playing. Or, by the way, they can go to Starbucks or to the Nairobi Cafe and have a drink while kids are playing. Again, bear in mind our objective, increase the dwell time. You cannot imagine how beautiful this piece of art is during nighttime, because with the lights, it's just outstanding. Even though during the night, sometimes, imagine that the footfall goes down. Even if there's nobody there playing, it's just beautiful, remarkable. South Wing. On the South Wing, we brought, every time you think about Lisbon, if you type on the Googles, Lisbon, and you go to images, what is the most, which is the image that pops up the most, more times? What is it? You do not know Lisbon? Come on. The tram. Tram. So what we did was, this is how that plaza that we called Coreto Plaza looked like. A little bit sad, I have to say. And we brought in a real tram. And we turned that tram into a coffee kiosk. Again, giving more chance for people to stay longer in our center, relax, enjoy the experience. And now that plaza is called Tram Plaza. And it's also a photo opportunity for people to take pictures. But my last part is, this is how the South Mall looked like. The quality of the pictures there on purpose to see, so that you can see how sad it was. But most importantly is, bear in mind how difficult, it was quite noisy. It was, we call it Las Vegas from the 80s. Brands all over, and most of the times people will not putting their attention on to what is really important. That is the front windows. And this is what we did. We took all those colors down, we brought this wood elements, and these elements here, they're inspired on the tiles. It's a modern interpretation of the tiles. But most important is today, and we're going to have the chance to walk around, when you look, you're not looking up to the facades, you're not looking to the brands, you're looking to the windows. Looking to the windows, and by doing this, we are able to increase the captive rate, which the retail team manages. And then we're going to tell the brand, you're getting the people inside your stores, so you need to convert more. And how can you do it? Probably it's because you do not have enough staff, and probably you need more staff. Or else, how can you work in terms of promotions so that you can increase the UPT? Gentlemen, this kind of conversation we would never have, at least in my time, in the shopping center industry with the retailers. They're not used to it. So it took a little bit time for the brands to understand that this was our compromise. And sometimes they say, well, you're going a little bit too far, aren't you? Because this is our job, we know about it. So how come you're trying to get information about it? This is our way to tell them that together we can improve their business. And I'm sure some of you, this is just we haven't stopped. So the Canal Street, this is something that we're planning for 2020. What we want to tell the investors that this is going so well that the next stage needs to be this. And again, it's all about improving the experience. We were able to, during this period, drive some key brands. And I'm just pointing these out because these are the ones that we know will be the drivers for recruiting the high net worth customer to our center. And all of these, they came because they believed in the refurbishment project. So they knew Freeport from the old days, but still, when they understood that we were part of VIA and we had a project and we showed the project, they believed in it. I know that you like figures. It's also one of my favorite topics. And here I'm showing you just a part of it. That is, when you look to the business plan, where were we in last year and where do we expect to be in 2023? So you're going to see that there is an increase on the sales figures by 60%. And that is coming not just because of the footfall. The footfall is going to increase roughly by 30%, but the additional is coming by an increase on the spend. How are we going to drive the spend up? By working with the retail and by bringing a different tenant lineup with brands that have a price point that is higher than average. If I would compare this, I'm not sure if this is a fair comparison, but if I would compare this, the actual figures, with the figures of 2014, we're talking about sales figures that today it's close to 53% more than it was in 2014. And if you look to the EBITDA, it's more than 50%. So this is just a kind of a wrap up to tell you that indeed, it was not just the investment that was done here, it was the way the investment was done. The question was, how can we increase the dwell time? And the answers, this is what I'm going to show you. And the impact was this, a really successful story to tell. And that's why I think Timon is also so happy, because it's not just about the figures, it's the storytelling around Freeport.